Hello and welcome. This is Connie from Prosperity Finance. Before Christmas last year, we sent a video about the interest rate campaign that most of the banks ran at the time. That was sub 4%, the historical low interest rates. We want to make people aware this is a really rare opportunity that if you can grab it, don't miss it. We had a lot of good feedbacks, and we even helped some people that's not our existing client, but we help them to analyze if it's worthwhile to break their loan and refix at a much lower rates. Now, we back from the new year, and we didn't know at the time that if the bank would continue with that kind of sharp offer. Surprise, surprise, those small banks start the new campaign again, and we see SBS, Cooperative Bank, TSB, HSBC started offering sub 4% interest rate again, and then followed with the Aussie banks. So now we're back to sub 4% rates, and recently we help clients to fix their loan at 3.95 or 3.99 for 1 and 2 years. Really common, but obviously it's case by case. It depends the purpose of the property and your the overall kind of mortgage situation. So I thought maybe I'll give you an update in terms of the trend, and also share with you a couple of questions that we commonly being asked. So we just discussed that the banks still offering really sharp rates at the moment. So it's worthwhile to considering if you haven't done so. Now, the trend going forward, I personally expect that the rates is going to be kept low because the cost of funds are still quite low, and we don't expect it's going up, especially the OCR rates that Reserve Bank keep it unchanged in February. So largely the interest rate will stay low, but are they still going to be under 4 for a very long time? I'm not too sure. And it's mainly driven by the cost of borrowing. So with the bank's costs, if they increase the deposit rates, it will definitely increase the interest rate. Otherwise, their margin are so squeezed and it's not sustainable. And all the Aussie bank also borrow a portion of their money from offshore, and that's heavily influenced by the overseas economy. So there's a lot of uncertainty. So no one would know how the interest rate and when the interest rate going to go up, maybe in the future, but at the moment, it looks like it's a one-off opportunity, and yeah, just take the opportunity if you haven't relocked your rates under kind of 4.05%. As I said, we want to share with you two common asked questions. Number one is, if my loan is still have like a year or longer to run out the fixed term, should I break it and refix at lower rates? There's no straight answer for that. And it's really a simple math, and we can help you to work it out. We will work out what's the break cost if you break now, and how much you're going to save if you refix at lower rates. And sometimes we have a better option, take you to another bank, so that actually the cashback will offset or even more than the cost of refixing. So you get extra money through cash back from the new bank, and you can also fix at lower rates, so save lots of interest rates in the long run. The second question we got asked a lot recently is, should I fix all my loan at 3.95 or 3.99? Well, I would say, again, there is no straightforward answer. Well, it's definitely worthwhile considering refix at that low rates. However, what's even more important is to manage your cash flow. Now, the cash flow is simply your cash coming in from your job income, from your rental income, and then take out your living expense, and then make sure you have enough money to pay your mortgage. Don't put all the eggs in one basket if you worry about the cash flow. If it's too tight for you already, then make sure that you're going to have some buffer. So don't lock everything at one fixed term. So try to split them, especially you have a large loan. And also, if you're considering change jobs or start up a new business or maybe have a newborn, make sure that you have your portion of your loan fixed at a longer term. Just give you some buffer. Yes, probably it will save a bit more by locking at lower rates, but who knows what the rate is going to happen. We can only predict based on the current situation. No one knows what's exactly going to happen. And plus, with the personal life stage changes, you might experience less income or more expensive. So make sure you manage your cash flow wisely. I hope this video is helpful to you or your family friends who's looking to fix your loan at the moment or unsure what to do with your remaining loan. Just give us a call. We'll help you to figure out. If you like our video, please feel free to subscribe our YouTube channel. We have a weekly great content arrive in your inbox. Thank you for watching. See you next time.